Hey, you are listening to What the Sigma with Chad Stacks. Today on the show, China's playing statistical theater with their growth numbers, while Uncle Warren just schooled everyone on where real money flows. China just dropped their third quarter numbers, 4.8% growth. On paper, that's impressive. In reality, it's like watching a magician perform with one hand tied behind their back, while the audience walks out halfway through the show. Here's what's happening beneath Beijing's statistical theater. Retail sales are cratering to 10-month lows. Property investment is down nearly 14%, and domestic demand is bleeding out faster than a startup's runway after demo day. But somehow, they're still hitting near their 5% annual target. How? Export alchemy. Chinese manufacturers are essentially doing what every desperate SaaS company does when their home market saturates. They pivot to emerging markets. Shipments to Africa surged 56%, Southeast Asia up 15%. Meanwhile, U.S. exports dropped 27%. It's geopolitical arbitrage at scale. One aluminum sales officer put it perfectly. If your price is $100 and the customer starts bargaining, it's better to drop $10 to $20 and take the order. That's not pricing strategy, that's survival mode. Chinese factories are becoming the Uber of global manufacturing, undercutting everyone until market physics breaks. This export dependency is fundamentally unsustainable. It's like building your entire business model around growth hacking while your core product deteriorates. When your citizens aren't buying homes or spending money, you don't have an economy. You have an elaborate export subsidy machine funded by ghost cities and over-leveraged municipalities. More after our break.
My name is Tom Sachs. I'm an artist in New York City. For nearly 2 decades, I have been collaborating with Nike.
Nike running is for runners, Nike basketball is for basketball, Nike craft is for everyone else.
Meanwhile, Warren Buffett just deployed over $1 billion into 3 sectors that make China's export pivot look like amateur hour. While everyone's chasing AI valuations that would make WeWork blush, the Oracle of Omaha doubled down on houses, beer, and gasoline. Berkshire increased its Lennar homebuilder position by 265%, boosted Chevron, and went heavy on Constellation Brands. This isn't sexy, it's not disruptive, it's just ruthlessly logical. America has a housing shortage of nearly 5 million homes. People need shelter, regardless of whether ChatGPT can write poetry. They need energy to move around, and they need alcohol to cope with mortgage rates. Buffett's betting on Maslow's hierarchy, while everyone else is betting on Silicon Valley's hierarchy of hype. The genius isn't in the stock picks, it's in the philosophy. While China's manufacturing everything for export, and tech companies are manufacturing everything for IPOs, Buffett's manufacturing wealth by owning pieces of what humans need to survive and thrive. This connects to something Morgan Housel calls the reverse obituary method, writing what you want your life to represent, then aligning your decisions accordingly. Both Housel and Buffett use this framework, which explains why Buffett's buying home builders while everyone else is buying hope disguised as software companies. The reverse obituary isn't morbid. It's strategic debugging for your life's code. China's growth story, Buffett's billion-dollar bets, and Housel's philosophical framework all point to the same conclusion. Sustainable success comes from solving real problems, not manufacturing artificial ones. The fundamentals always win, eventually. This has been another fire episode at What the Sigma. Smash that follow button and tap 5 stars to spread the butter. Fortune favors the bold, baby.
Grep News. Thomas.